All right, awesome. We have a lot of people here today. Thank you so much for joining. Again, and I will mention this a few times, if you have any questions, please send them through the Q&A. I will be able to go through those during the webinar and answer them, as well as save some time at the end to answer any questions. And just, if the question isn't being able to answer today, one of our team members can reach out to you. We also have chat support, so we definitely want to be able to connect with you after. My name is Sydney, and I will be starting this webinar off today, and then we'll be hearing from Josh, actually going to be taking us through the platform. So before we get started, here is a little bit of an agenda of what today we'll have. We'll have an introduction to Fathom, just kind of mentioning what it is, just for people to know specifics. And then we'll actually be talking, through the platform, and Josh will be doing all of that as well. And if you need anything, just let me know. And also, if you can't hear me or anything gets disconnected, sometimes if you guys have stuff going on in the background, it can make it lag a little bit. Awesome. So Fathom is an all-in-one business reporting, analysis, and planning tool. Through Fathom, you're able to analyze different KPIs. You can report on your financials, both historical, as well as use Fathom to plan for the future. And of course, that is what this webinar is focused in on today. So a little bit of background on how it works. So Fathom is going to connect to your source accounting system. We have a few different integrations right now. We have QuickBooks, Xero, Sage Business Cloud, MyOb, as well as Excel. So whether you're using Fathom already or you're not, just know that really anywhere that you're using your financials or anywhere that is, you can get it into Fathom through Excel. And basically, this webinar is going to go through some common problems, just kind of like how to use forecasting and all of that. And I just want to note that today's webinar is going to be based a little bit more in strategic planning. So the idea is that you have some common knowledge of what Fathom already can do with forecasting. And if you need more help on like the lower level, the baseline on what Fathom can do with forecasting, we do actually have webinars every Friday. I actually just gave it. It's on how to set up your baseline and do all that. So if you feel like you need a little bit more background, we definitely have that. We have Help Center articles. You also can meet with any of our team members, and we can give you one-on-one training on how to use forecasting. So a little bit about the product, just general understanding. So you have, you can build a dynamic forecast with scenarios, explore what ifs. So like, can I hire this new employee? Can I purchase this new asset? Can I get a new loan? So there's a bunch of different things that you can do. And you can engage with stakeholders. So you can kind of show them how you're doing, what you can do to make more money, how to save money. With Fathom, you're able to have unlimited users inside your account, and you can also control what they can do and see. So maybe you want to invite people in to view the forecast that you're building or the reports, but they can't like edit or change anything. So just know that you are able to do that if you didn't know that already. Again, send your questions through the Q&A, and then I will get to them. I'm going to go ahead and pass this off to Josh and get the webinar started.
I'll be taking it from here for this portion of the webinar where we're going to be in product. If you saw earlier, my name's Josh. I'm a customer engagement lead with our Americas team, and I'll be guiding you through kind of the product today. We'll be looking at some of the, I think, less used, but still incredibly powerful features within Fathom's forecasting tool. Now, today, I am going to assume that you have at least a baseline understanding of how our forecasting tool works. If you don't, if this is the first time you've looked at our forecast, stick around. You'll probably still learn something pretty cool, but we do have some other resources that will focus on kind of getting started in the very basics. Now, that being said, as we get into the forecasting tool, I will cover just a handful of upfront pieces so that we're all on the same page. Now, I've already created a forecast for our company here. We're working in an entity called Aptos Retail. And this is a company that has two major revenue lines. A lot of our revenue comes from product income, but we're also looking at building out a new kind of service line where we're sort of consulting with our clients. And that's going to be a big point of emphasis as we build out this forecast here, is that service income. Now, to get you situated, if you haven't seen it before, we'll be working today in a couple of different financial statements, primarily focusing on our profit and loss. We'll also look at a little bit of balance sheet movements. Fathom also offers a cash flow statement, which we'll review at the end. And then there's this fourth tab up here called drivers, which we'll get into in a bit. If you've used Fathom's forecasting before, you still may not have utilized our drivers functionality. I think it's one of the more powerful pieces in Fathom, and we'll touch on how you can utilize that and how you can manipulate that today as well. Now, as I mentioned, I want to kind of walk us through just some of the basics so we're all on the same page first. And we're going to take a look at our profit and loss. Now, at the core, the way Fathom's forecasting works is we're going to project out each individual account line monthly utilizing something called a value rule. So if I select my P&L account, my retail sales line, you're going to see a menu pop up on the sidebar here. And this will show me two things. It'll show me our value rules and our timing profiles. Now, Fathom offers a bunch of value rules. In this case, we're using smart prediction linear regression for most of our revenue lines. This means we're going to take a look at the historical data, draw a line of best fit through that historical data, and then project it into the future. Now, as you build your forecast, you're likely going to want to use different rules depending on each different account line, and Fathom gives you access to a couple of other options. You can see here, we've got our linear regression option, but we can also switch over to like average or rolling average of the historical data. We also have access to options like link to prior period. So last year, maybe plus 5%, options like constant or growing, and options like custom formulas and drivers. And we will get into some of these custom formulas in a bit here as well. As you're utilizing your forecast, you're probably going to want to test out some different methods, and you'll settle on some. But the ability to jump between projection methods and jump between other kind of assumptions as we build out our forecast is one of the biggest strengths of Fathom's forecasting tool. And you'll see that throughout the tool. I think one of the best parts is the ability to roll forward and backwards in time. Everything that we do here, if we revisit our forecast in 6 months, it's still going to be in place. And it means that, the work that we do is able to kind of stick with us. So if we revisit, well, in this case, I'm going back in time to January, we can set up a bunch of rules, and you can see our service income is projected at 0 in January. But then when we roll back to September, we're adjusting based on the future numbers. So there's a lot of kind of cool things that we're able to manipulate. Now, we just looked at the value rules. The other thing that we're going to be tinkering with here is timing profiles. If your business or your client's businesses are cash basis, you might not have looked at timing profiles at all. But if you are accrual basis, you're using AR and AP, you've probably found timing profiles can be an incredibly powerful tool, especially when it comes to balance sheet movements and cash on hand in particular. The way these work is basically, you're estimating how an account is going to get paid out. For Aptos, our retail revenue line is all cash basis, right? We sell a product, the customer gives us cash, that goes into our cash account as soon as we get it. But for our service line, our service revenue line, things are a bit different. We're going to invoice the clients, and typically we can take up to 60 days to get that money. So if we go over to our inventory service line, you can see here we have a separate timing profile. And if I open this up, you can see what's going on. The way it works is that we recognize, about $100,000 of revenue in October. Only 30% or 34%, about a third of it, goes into our cash account in October. The other 60-some% goes to our AR account, and then Fathom will automatically journal over a third from AR to cash the next month and a third from AR to cash the month after that. So we've got some delayed payments on these service lines. This is something we're going to look at once we start to tinker with the scenarios. Maybe we're going to want to change the way that we charge, or, charge faster, or expect to get paid sooner. So we're going to leave this be for now. Those timing profiles and value rules are kind of at the core of building your forecast. But if you've looked at Fathom forecasting before, you've likely seen the other kind of major feature here, which is called micro forecasts. And this is really important for the sort of what if and the decision-making side of building your forecast in Fathom. At the core, the micro forecasts are a way to represent specific items or events that may or may not occur and that have any level of uncertainty in them. So you probably saw when we were looking at our revenue line, but we're thinking about hiring some new employees next year. When we're looking at the projections for something like our payroll account, though, we don't want to factor those in to our linear regression, right? Those are going to be separate. So instead of plugging in a bunch of additional numbers throughout the forecast, everything that's going to change when we hire a new sales associate lives right here. So this is something I've created previously. We can see a modest increase in our sales that's going to ramp up over time. Maybe we just don't have enough manpower to process as many sales in the store. And so we know that bringing somebody new on board will directly result in an increase in sales. We've also modeled out this employee's salaries and wages. So, we've got their salary on a monthly basis. We have to buy them like a uniform and a few other supplies. So we have an increase in our office expenses, an upfront couple $100, and then just a slight increase over time. And we're also going to have to train them up. And maybe we have a training vendor and we have to engage them for a short period. So we have a couple of additional dollars in training expenses up front. So all of the movements tied to this this event, tied to this decision, live here in the sales associate junior micro forecast. It's not just P&L amounts. You'll also see balance sheet amounts. There's not a whole ton of balance sheet movements with this particular decision, but all of the cash changes occur here in our primary cash account, the American Express 3472. And I can look at how each of these individual lines impact that. And then when we exit out of the micro forecast, basically all we need to do is turn it on. And in this case, you can see it's on, and our forecast numbers reflect that this micro forecast is on. If we change our mind, we turn it off, those numbers are extracted from the forecast and will reflect not taking this event. Now you'll notice here there's a few other options. I'm looking to hire potentially up to 3 different sales associates. So I have this same micro forecast that we cloned twice. So we have 3 versions of it. And you can plug in almost anything else with these as well. So we've got, purchase a new service vehicle sat down here as an asset micro forecast. And anything else you can kind of think of, you're able to, create a micro forecast to show different decisions. So most of building your forecast in Fathom is going to utilize these kind of 3 features that we've looked at so far: the value rules, the timing profiles, and the micro forecasts. Now, the last thing that we're going to do with our forecast, though, once we've built it out and we're happy with it, is we're going to start making some adjustments and maybe looking at some other scenarios. And this is where we bring in this kind of final feature, the final major thing that I think doesn't get as much attention is Fathom's scenarios tool. And we can access this through the little thought bubble right here on the left sidebar. Now, when we click scenarios, I have already created one a couple of days ago. This is our worst case scenario. In fact, one of the most common uses for scenarios is best case and worst case. They're pretty simple. And it's basically, hey, if we make more money, things look like this. And if we make less money, things look like this. Now let's create a really quick best case scenario. So I go to the bottom and I'll say create a scenario. We're going to call this best case. And every time we make a new scenario, we're going to base it off of something else. Now, the majority of the time, that's probably going to be based off of our main forecast, the one that we just created. But as you spend more time, you might start iterating upon those scenarios. And so I don't have to use the main forecast. I could base this off the worst case scenario. So maybe it's like an extra worst case scenario. In this case, though, we'll just go off of the main and we'll leave it there. Now, as we build out this scenario, there's a couple of things we can change. First, you'll notice taking up most of the screen is the ability to adjust the micro forecasts. Now, as we left the main scenario, we only had 2. We only we only had 2 of these junior sales associates on. We didn't have the third one on. So we'll come back to this, but this is one of the ways we can utilize scenarios is to change the timing and the combination of micro forecasts. And when I said timing, it's not just do they happen, but when they happen, right? So here we were looking to hire all of these people in November. Maybe in this scenario, we're going to hire them in December or even next January. So we can make some of those adjustments here as we design the scenario, but we can change these down the road. The other thing that we can do, though, as we create the scenario is add what we call a baseline configuration. So right here, there's a button that says Add Configuration. If I hit this, it's going to add one right away, and you get a very easy idea of what's going on here. This version is basically now taking the main forecast and we're adding a percentage increase of 2 on revenue. So 2% increase in revenue. Basically everything is going to be the same except for these micro forecasts will hit different timing and all of my revenue is going to be 2% higher. And maybe we want to change this because if this is best case, we want to see, in the past we've done better than that. So in this version, all of my revenue is now 8% higher. And you can adjust these baseline, configurations. Maybe we want it to be a dollar amount higher, and maybe we want it to be a dollar amount or percentage lower. We could add in a configuration and say, hey, in this one, not only is our revenue higher, but our expenses are going to be lower, right? So a 2% decrease in expenses. Maybe this is a little bit too lofty, so we'll remove that one. But we've set up a few changes so that our best case scenario is now a little bit different. We hit create. And it's going to take us back to what looks like the same screen that we were on. We can see our main grid. We can see, our monthly balances on our P&L. We can jump over to the cash flow and to the balance sheet and see what's going on here. But if you notice in the upper right, we have this best case flag. So this tells us, hey, we're in this version of the forecast rather than the main forecast. And that also means we can start making changes without affecting the main forecast. And we'll do that in a different scenario. And so to go back, all we have to do is close out. And now we've jumped back to the main scenario. And you can see the balances on all of these have adjusted. They've spun to change and reflect the original setup. Now in this version, we're going to do a little bit more than just adjust, those baseline configurations. Instead, we're going to make some changes to our service income, right? So we're going to call this adjustments to service, spell it correctly, I recommend, service revenue. Now I'm going to leave the micro forecast the same. We're going to leave the configurations the same. So in theory, when I hit this button, and in actuality, everything in this scenario is identical to the main forecast right now. But beyond just those changes to the configurations and the micro forecasts, we're also able to make some adjustments to things like timing profiles and value rules. So if we come in here, we can take a look at service income, and let's take a look at this timing profile. Now, it's defaulting to collect over 3 months. In this scenario, we want to see what happens to our cash if we collect faster. So instead of 60 days, let's say in this version, we want to collect in 30 days. So this is what we're going to do. We're going to create a new timing profile. And instead of spreading this out over 3 months, we'll delete that one and we'll just say 50% cash and 50% by the end of the next month. So this means all of the service revenue is collected in 30 days instead of 60. We create that profile. And what you'll see is the P&L amounts don't actually change because the charged revenue, the recognized revenue, is not changing. What is changing is going to be the balance sheet and the cash on hand. So if we jump back to the main scenario, you'll notice our cash on hand number at the bottom is going to spin because it's taking us longer to collect that revenue, and our cash on hand actually goes down. Now let's go back into that scenario and make some other changes as well. I mentioned when we were looking at different value rules, different projection methods, one of the options is formulas. For the product income, we're just doing a basic linear regression. But we know a lot more definitively how much money we expect to make from our services because there's a limited number of customers and those engagements are preset. So we've set up the calculations for service income through a custom formula rather than just linear regression. Now we can take a look at what that formula is. Let's go back to this main one so we can see the formula. If I go into edit, you'll see the formula is service 1 revenue plus service 2 revenue plus service 3 revenue. Now, where are these numbers coming from, right? For this company, we actually offer 3 different tiers of service, but we don't separate them out on the P&L. All of the money from all 3 services kind of drips into the same sales services account. So outside of my P&L, I've created some variables, or in this case, some drivers to represent these things. So these numbers, service 1, 2, and 3, are coming from that 4th tab, the drivers tab. So let's take a look over at what's going on in the drivers tab, and it'll make a little bit more sense. Now, drivers is sort of a catch-all for everything that you might need in your forecast that's not on the P&L and the balance sheet. If you haven't used drivers yourself, it may be blank, but it may auto-populate with some things like interest rates on loans. If you've created some loans in the system or used some defaults, interest rates will live here as well. In this particular company, we did some tinkering. We tried to plug in like unit sales and price. Maybe we're trying to estimate out some particular items, but we didn't really end up utilizing these. Instead, though, you can see I've created several different drivers to track our different services. So we've plugged in some estimates or some forecasts on how many clients we have in each service line. We have roughly 40 we expect to have in October on service line 1, 19 on service line 2, and 4 on service line 3. Now, I have plugged in some very basic formulas, in this case, increasing by 3% each month, just to show some mild expected growth in the number of clients we have on here. Just like with everything else in a forecast, we can get as accurate as possible, but it's not going to be perfect. The thing to keep in mind as well is the further out you look in a forecast, the less and less accurate it is. So, when we're talking 3+ years out, we probably don't know, what these numbers are going to represent. But in the next 6 to 12 months, these are going to be relatively close based on the past numbers we've seen. The other things we've plugged in here, not only the number of customers we expect to see on each service line, but also how much we charge them. So if we have 40 customers on service line 1, each one of those customers is charged $1,200 or 1,200 pounds, whatever your currency is, for their monthly fee. And then I've created a final little driver down here that is just clients on that service line times the monthly fee. So this 48,000 is a result of those 2 numbers multiplied by each other. And I've done that again for each of the other service lines. And so when we looked at that service revenue, it was these 3 drivers added together, which are these drivers multiplied by each other. So that's where that formula comes into play. And now we can take a look at what we can do in the scenario. So let's jump back into our adjustments to service revenue scenario. And the really nice thing about drivers in a scenario is that I can change them without affecting the main forecast. So let's say we want to test out what's going to happen if we increase all of our prices in January. So we'll look over here and we'll see this 1,200. I'm going to add in a new rule to service line 1. And instead of being $1,200, starting in January of 2025, we're going to charge, let's say, $1,500. So we'll create this rule and it'll override these balances. And now my service 1 revenue starting in January has auto calculated and it's gone up. And we can come back here and we can do the same thing for all of our other service lines. So let's add in a new rule on service line 2. And instead of 22, this one's going to be 2,600 per month. Create rule, and we can we can see, we just need to make sure that this applies in the correct time. I set this up as January 28 instead of January 25. So let's roll back in time, apply that in the right spot. There we go. And a third time here for service line 3. And I'm doing all of this at once. You might test out different combinations with each different scenario. I believe there's no limit to the number of scenarios you can create. So we can create one for, hey, we're going to increase this price to 15 and leave the others the same. And in this one, we're only going to increase mid-level service fee. And in this one, we're going to increase everything up across the board, the whatever 30% that we're doing here. So I'm going to add in this final adjustment. And in this one, we're going to hit in January 2025. And this one is going to be an even 4,000 per month. And all of these prices take effect in January. So we've made all of these adjustments. They affect the service revenue totals, and they will automatically affect the forecasted numbers as well. So now in this scenario, we can see, hey, this is what's going to happen to our revenue if we make these changes, but we're not locked into it. I can close this out and we'll jump right back to the main scenario. So it allows us to come up with our most realistic expectations, and then also kind of, still keep the ability to tinker with all the adjustments and everything else that we might see as well. Now, one of the other things that we can do within these scenarios is play with combination and timing of micro forecasts, a little bit of an easier use, but let's show that as well. So we're going to create a new scenario, and we're going to call this one, higher over time. So in most of the baseline scenarios, especially in our main forecast, and I've plugged us into so we're still in the main forecast right here. We're going to hire all 3 of these sales associates in November. In this version, we're going to go into that hire over time. We are still going to hire all 3 of them. So let's switch these on, but we don't want to do it all at the same time. So we're going to switch into Fathom's roadmap view. And this is kind of a really nice way to boil down the movements on our forecast. And instead of looking at a big spreadsheet, we have a timeline where each of our micro forecasts shows up as a sort of colored bar. Right now, all of the events are happening in November, but I can just take this and say, hey, let's hire this one in January instead. So we'll drag and drop that event there, and we'll hire this person in March. So we drag and drop. And behind the scenes, all the numbers are changing. If you pay attention to cash on hand, you can see as we move this, the cash on hand will adjust as well. But we don't really have to think about all of those different movements. So this is what happens if we hire them over, a 4-month span. We stagger the hires, and then we can jump back to our main forecast. This is if everything kind of stays the same. So there's a lot of ways we can iterate and save our work, and work, build upon all the different scenarios we've made. Now, the last thing I think is worth looking at is how do we use this and how do we present this as well? Especially, folks that are using Fathom, there's oftentimes stakeholders that you're speaking to or clients that you're speaking to who they do need to be involved in the forecasting and the planning process, but they're not always the best at looking at spreadsheets. Like myself, I know what's going on here. Not my favorite thing to look at. So if you're looking to present everything that we've just set up, all the different scenarios and forecasts, instead of showing them this screen, we're going to go into Fathom's reports. Now, I'm assuming all of you have used Fathom's reporting tools before, but I think it's worth showing off some of the forecasting and scenario-specific features. I'm going to go look at Fathom's templates. And actually, every company that's in Fathom that has a forecast has access to our forecast analysis and our advanced forecast analysis templates. I'm just going to pull up Fathom's advanced forecast analysis template, and we're going to take a look at some of the different ways we can present the data that we just built. So the first thing we see in our report is the business roadmap. Very nicely, we can see, in this version, all of our employees are being hired in November. If we want to show the other plan, though, we can just clone this, and every kind of forecasting based component in the reporting tool, we're able to add in like a filter, right? So every time you go into the edit panel, it'll show, which version of the forecast we're using. It'll default to the main forecast, but we're able to show any of the scenarios we've created. So this one will swap over to higher over time. Now, in this case, we're only showing the timeline for December. So let's switch this over to, like a rolling 12 forward. And now we can see, hey, this is the other plan, the business roadmap for hiring over time. And we can look at the different cash amounts we see at the bottom based on these particular decisions. And it might be easier to compare if they're both looking at the same time period. So let's switch this guy to 12 months as well. Oops, 12 months, 0 months. There we go. And so now we can see these two different ones side by side. There will be a lot of kind of additional information in the this report template. And it is just a template. You're able to edit things like details on specific micro forecasts. This is basically our total revenue based on baseline plus the different micro forecasts that add up to it. And just like with everything else, these are going to be looking at, specific items. So we can see revenue plus micro forecast there, COGS plus micro forecast. This one is showing like our cash flow over time, right? And this is for the main forecast, but we're able to filter over to one of our different templates if we want. But my favorite thing that I think is worth looking at is going to be if we scroll down, since we are focused particularly on scenarios, is Fathom's scenario kind of trend graph. This is my favorite thing in the reporting tool. I think it's a really great way to visualize what we've done. This template shows revenue scenarios, and it'll default to showing just a couple. Now we're going to edit this component and show you a little bit more information. So we'll do what we did last time and change the date range. I'm going to show the last like 3 months and then the future 12 months or so. And based on the different setups we've had, this is where our revenue is going to be. And we can alter this. Maybe we're focused on something like cash instead, cash on hand, and we can swap that. And so this is our cash on hand based on these different scenarios. Now this one's only showing my top two. So my most recent were worst case and best case. But maybe we also want to see the adjustment to service revenue, and we want to see that higher over time as well. If we remove the best case and worst case, it'll give us a little bit more focus. And I'm doing this for cash on hand. We could do it for revenue, but you might make a series of tables like this or a series of graphs like this that are showing all sorts of different metrics. So instead of that, let's go total revenue. We can see this one, and we get a nice little bump here in January. So this is that price change that we plugged in, whereas we're not seeing quite the same bump in the other two scenarios. And so there's a lot of different ways we can build out, reports and visuals to create a sort of presentation tool to show off all the cool stuff that we set up for the report. Hopefully this was a very sort of useful way to look at some of the forecasting tools. If you have additional questions, I think we're going to leave the rest of the webinar up to that and a few other components, but I appreciate your time listening to me talk. I really do love some of the drivers and the scenario stuff that gets in here. And like I said, it's not as a heavily utilized piece of the platform, so I don't get to talk about it as often. So I appreciate the opportunity to dig in. Thanks so much for your time, folks. And we'll call it here.
Okay. Hi, everyone. Just confirming that you guys can all still hear me. I've been answering a bunch of questions in the background. I've answered the question about, is there going to be a recording sent later multiple times? Yes. It's in the Q&A. Or I responded a couple times here. Don't know if you guys can all see that actually though. So I guess making it so that you all hear me. Yes, there will be a recording sent. So you guys can all view this again at your leisure and walk through it, maybe slow it down. I know Josh talks a little fast. He's very knowledgeable. So sometimes with his excitement, he can go through things very fast, but we'll send you a recording. And again, we can always meet with you individually and do like one-on-one training. I know that sometimes it's easier to see your own data while talking through it. And so that is definitely an option. Okay, I'm going to go through the questions now that I didn't get to. Feel free to keep sending them in. I will do my best to get to all of them. If for some reason I don't finish them all today, I'll do my best, or if I can't answer it, I will reach out to you or somebody will. Okay, so, and I know you guys are sending some through chat. If you could send them through the Q&A because I can keep better track of it, I would appreciate that. So maybe stop sending them in the chat and send them in the Q&A, but I will check the chat for the ones that don't get sent in the Q&A. Okay. Why have the service revenue totals in the drivers versus just having the calculation in the micro forecast? It's a great question. Because drivers and micro forecasts are a little bit different. Micro forecasts sometimes are seen a little bit more as like an individual event, like, am I hiring this person? Am I getting a new loan? And it's just like a little bit more of a singular thing. It's not necessarily something that you want to embed into the entirety of it. So like on my demo companies, I have a pizzeria and I have expected lunch purchases and expected dinner purchases and their average cost. And I want to embed that into my actual baseline of my forecast. So I'm building it off those expectations. But then with that, I want to then on top of it be like, okay, well, can I afford a new chef? Can I remodel my kitchen? Right. So they're like a little bit different in viewing. So you will kind of have to play around with what makes sense for you and your forecast, whether or not this is a driver, this is like a known fact that I want to embed into how I'm forecasting, or I just want to see if I can do this specific thing. So that's kind of the difference there. There's so many questions coming in. Okay. Can you link an Excel workbook to the forecast? Kinda. So, and And you can only do one. So inside of the settings of your company in step 1, you can load a budget, and you can load in a budget from Excel. Then you can go to your forecast and you can build a budget, or you can build a forecast from a budget. Again, as mentioned, and I know a lot of people are coming and going, so you might not have heard this, the webinar today was a little bit more of like a higher level and an expectation that you have a general sense of doing the forecast. So that kind of question about loading in an Excel is something that we can definitely like talk about. And we also have webinars for people that are just like learning a little bit more of like, well, how do I even get the forecast started? And they're not necessarily at the level of like what if planning. They're more like, well, how do I build a forecast? So if that is something you need some more help with, reach out to our chat support and say, I want to meet with somebody, and they'll connect you with the right person, whether it's somebody on my team or the accounting team. Can the results be exported to Excel? Yes. So both in a couple ways. And actually, somebody asked a question earlier about downloading historicals and future 12 months. So all of this information in Fathom can be downloaded. So whether you're doing it from the forecast tab in the bottom left corner, there's a little download button. You can download your P&L, balance sheet, cash flow, and you can choose like how many months into the future you want to download. Or in the report section, if you build a custom P&L, a custom cash flow statement, whatever it is, you can also download that in Excel. So you should be able to get any and all of your information off of Fathom and into Excel. And then does it keep any formulas or just the value rules? So it's just downloading the numbers, not necessarily the information behind it. Okay, if we use funnel metrics, would we set up these up as drivers? For example, if we spend X dollars on advertising, we estimate X number of leads. For every lead, we get X demos. For every demo, we get X paying customers. That's a good question. Let me think about it for a second. I would imagine that as drivers. Yes, I feel like that is a little bit more of like kind of what I mentioned earlier. That's like an embedded knowledge that you get. I think so. I think it would just be like a little bit of a complicated formula. That one might be one that would be good to like meet with somebody and like talk through it. But I do think so. I think you would just kind of like set up a driver, and then you would be like this percentage of that. And then you also might be using micro forecasts and drivers, because sometimes you do that. Sometimes because you can use drivers in your micro forecast, right? So your drivers that you create do not need to be just used in the formula for the baseline. They also can be used in the formulas inside the drivers, and then inside of the micro forecast, and then the micro forecast is sitting in the baseline. So again, it is a little bit of figuring out what makes best sense for what you're looking for. And I feel like I keep repeating myself, but sometimes meeting with somebody just one-on-one and like talking it through with them and like sharing your screen is really beneficial. Just know that all of you are welcome to do that. Yes, Fathom has a certification. We 100% do. I can, if you already have an account, I have your name here. I can turn on the certification for you if it's not already turned on. If more people want certification, just let the chat know, say I want to do certification, and they will make sure that you have access to that. Can you talk a little bit more about the beta AR and AP historical integration? I will try my best. Okay. I'm just going to pull up the article here. So not all you might know, but we recently have a new integration for AR and AP. This is just for QuickBooks Online, and I think Xero. It's not for QuickBooks Desktop. It's not for Excel. I know that people would like that, and we're continuing to add more into Fathom, more integrations and stuff. But basically with the ARAP, it's just this idea that you want to be able to see your customers and how much money they owe you and like when that's due. So like when you build the charts for it, it's showing like 1 to 30 days, 30 to 60 days, and like how late the payments are to you. And you can kind of show the money that they owe you. And then you can also do the money that you owe to your customers or vendors or whatever. And so that if you don't see that, and you have like QuickBooks Online or something, again, just reach out to chat support and be like, hey, I have QuickBooks Online. I can't see ARAP. Beta might not be turned on. We can turn it on for you. And by the way, guys, if there is anything that you're noticing that isn't working with that, please let us know. I mean, obviously beta means that we're still working on it. So please don't be afraid to say like, hey, I need help with this, or this isn't working. How do we schedule training one-on-one? You just reach out to our chat support and say, I want to meet with somebody, and they will connect you to the right person, because we just have different teams depending on if you're an accountant or a business owner or work for a business. Is it possible to forecast by class in Fathom? Yes. It's not complicated, but there is a specific way you have to do it. So when you have, just to say QuickBooks Online, and you have 5 locations, what you need to do is import each of those individual locations as their own single tracking category, as their own company. And so when you click add at the top, so when you would like connect in your QuickBooks, you click add, you click QuickBooks, and then right underneath the connect to QuickBooks Online, there's a alternatively import as a single tracking category. It is $8 for those. So I know we have our pricing structure on fathomhq.com. And so if you have any pricing questions, I would just go to that, and you can like scroll the little tab. I have 5 companies, I have 7 companies, whatever it is. That's not the same pricing for tracking categories. It's $8. And so you would want to reach out to one of us, and we can build you a custom plan, because you can be like, okay, I have 7 QuickBooks files and 5 classes. We would build you a custom plan so that you're charged appropriately. So yes, you can do that. It does cost a little bit more, but then you get to have that class as its own company in Fathom. You can report, you can build KPIs, you can forecast, all of that fun stuff. Okay, I have 3 companies and then a consolidation company. How can I forecast cost at the individual company level, but the revenue at the consolidation level? Is that possible? Let me read it again. How can I forecast costs at the individual company level? So I'm assuming when you say this, it's because you want to be able to see all the costs individually while also seeing it against the consolidated revenue. I don't think that's possible, because once you create the consolidation, kind of like almost what I was talking about with the classes, like if it's rolled up into that one QuickBooks, you're not going to be able to break it out and see it individually. So once you have the 3 companies and you consolidate them, all of the costs are just suddenly consolidated. When you look at it on the forecast, you don't see, location A cost, location B cost, location C cost. You just see all of them. But I would be interested in having you meet with one of us and like talk through some more details and see if there's like some workarounds, or make sure that I'm understanding you correctly. What is the best practice for handling a original budget annual plan versus a rolling forecast that takes actuals and reforecasting of forward months versus scenarios? Okay. What is the best practice for handling an original budget annual plan versus a roll? That's interesting. Okay, so oftentimes when people build budgets, so let's just pretend we're at the beginning of the year and you build a budget for the full year. It's kind of like, hey, this is like set in stone. This is our budget. And it might not be flexible. That's where kind of Fathom can come into play with a little bit more of that flexibility, right? With that rolling forecast, it's going to be updating with your actuals coming in, because what it's meant to do is how to give you a better sense of how you're doing. So like you might have set a budget for 10,000 in October, but then you see, at the beginning of the year, and then you get to September and you're doing really well, and so you can go more. And so with the Fathom forecast, because it's continually updating with your actuals, and you're being able to manipulate it, or you can plan for something that happens, that you didn't know was going to happen. You can just make better adjustments to your forecast versus your budget. And that's also what scenarios are, right? It's this idea of like, okay, well, I can build budget A versus budget B versus budget C. And you can kind of build all these different scenarios. And it really just Fathom wants to give you more of a well-rounded view. And so you can really play around with what ifs, kind of like Josh talked about. Also interested in certification. Okay, I will get like a downloaded list of this with people's names and their questions. So I'll make note of that. Okay, my AR is incorrect. I've tried using that, and other AR is still showing up, even though those have been paid. That is not a question I can answer on here. That is something that you would want to reach out to our support, which is the chat. They deal with any errors or issues, and they're wonderful, and they're super helpful. So please chat them. It's just in the bottom right corner of our Fathom webpage. Just let them know there's an issue, and they will hopefully be able to help get that figured out for you. Okay, that's everything that's in the the Q&A. I'm going to go back through the chat and see if there's any that I missed. Again, a couple more times people asked, I will share this recording for sure. A couple more people said they want the certification. Okay. That's everything. There's no more questions or chats coming through, but I will definitely stick around for another minute or two if people are thinking it and typing it. I know sometimes you can't type as fast as people talk, so I will hang out here for another minute and just watch that. Otherwise, feel free to hop off. Feel free to chat us, and if you want to schedule some time with us, we are more than happy to. Again, if this webinar ends and then in 5 minutes you're like, oh my God, I have a question. We're all online. It's a working day, so we'll be able to answer your question within the next hour, probably. Yes, this recording will be shared. I don't know for sure if I'm sharing, if I can share the questions or stuff, but I definitely can try and make sure I can give that to them, give you that to you guys if you guys were interested in the questions. Of course, I'm glad that this was helpful. I hope you all have a wonderful rest of your Friday and a happy weekend as well. If you do not enter rules into the forecast, what are the default rules that are being applied? That's a great question. So again, I don't know how, I don't think Josh went into too many specifics again, because this was a little bit more of that next step with the forecast that you have one set up. But we have what we call value rules. And so value rules are basically just how you want to forecast each different account. And so there's a smart prediction, which is the classic one. So it's basically just looking at your historicals and going, okay, this is what has happened. This is what we think is going to happen. But we really don't want you to depend on that, right? This is just whatever. I'm not a mathematician. I'm not entirely sure, but that's just what it's been set up. And so you can do a smart prediction of your last 6 months, of your last 12 months, 24 months, but definitely go in, check it and see if it makes sense for you. And you can also do an average of the last 12 months. You could, match last year and add a 10% increase. So there's a bunch of different value rules and everything. All of that can be also done in a one-on-one training where we can walk you through that. Oh, we did have something called office hours. I don't know if we're going to bring that back. If that's something that you guys liked or want back, let us know. You can, I'll just put it into my little list of things. But we definitely want you to know that the one-on-one training is never going to go away. If you say, I want to meet with somebody, you will meet with somebody. Obviously, all our availabilities just differ depending on the week, but you're going to be able to get online with one of us on a video call. So never fear, that is available. Is there a standard schedule for monthly training? So we have Monday webinars every Monday. That's getting started with Fathom. That is a live webinar that walks you through connecting a company and creating KPIs. And then every Friday we have deeper dive into forecast and reporting, which will give you more of a how to set up your forecast, how to build a baseline, kind of that first level. That's every Friday, and walk you through reporting. So that is every week, Monday and Friday. And then I am not usually the one on the webinar, so I don't know what our webinar schedule is, but we are always trying to think of new trainings. And I do think we want to be having a webinar, if not two, if we can, every month that's going through a different part of the platform. So there's definitely should always be some sort of training going on. When can you expect the recording? That's a really great question. I don't know. This is my first time on Wistia. I don't know how long it takes for it to download, but I presume pretty much as soon as it's processed, we'll send it out. So hopefully by end of day today. Okay. Anything else? just like sitting here watching it, seeing if anything else comes through. But hopefully I answered all you guys' questions, and hopefully pretty thoroughly. Sometimes, I know I said it, it's really easy. It's a lot easier to understand when you have one-on-one time with somebody. They can look at your data, because sometimes somebody will ask me a question and I'm like, I have no idea. And then I see their chart of accounts or like the way it's set up. And I'm like, oh, okay, I get what you're asking now. So that one-on-one is really important. Do you register for the Monday and Friday training? Yes. If you just go to fathomhq.com under the resource tab, click live webinars, there should be a link right there to both the Monday and the Friday one. Thank you all for your thank yous. I appreciate you guys taking time out of your day to watch this. I hope you're enjoying Fathom. And if you need anything, we're here to help. And we love to hear your ideas. Obviously, we can never guarantee that we're going to be able to add them to the platform, but it is really nice to know what you guys like, what you guys want to see. So don't be afraid to let us know. It's really important for us to hear back from you guys, because we just want Fathom to be the best for you guys, because I know you're the one using it. I'm just going to stick around for just another minute because some questions kept popping up, straggling around. But I think most people are dropping out now. My cat just jumped on my lap. Okay. I think I'm going to call it. Nothing else is coming through. Again, if we leave and then you have something, reach out to chat support. We're all online. We'll be able to help you. Okay. I hope you all have a great rest of your day. I'm going to make sure that recording gets sent out to you guys and the people that want certification, as well as if you think you want it later, just let us know. I hope you all have a wonderful rest of your day. Bye, everyone.